Hello everyone and welcome back to another video. Okay, so today's video is about Kraft Heinz. Alright? There's a lot I'm going to say about this one, so strap in, get your seatbelt, get your popcorn, get your ketchup, get whatever you got to get, but just get ready. Okay? So let me just tell you a little bit about me. I love ketchup. Okay? I legit love it. Love Heinz ketchup with a passion. Don't believe me? Who else puts their face on a bottle of Heinz ketchup, okay? This guy right here puts his face on a bottle of Heinz ketchup. You know why? I'll put my face on that ketchup bottle. I'll put ketchup on most things I eat. I love ketchup. But I will not, and I repeat, not put this stock in my portfolio. Why not? Why won't you put this stock in your portfolio? You love it on everything else. Well, I just mentioned in one of my other videos that I can definitely love a company, but not love their stock, and I can love a stock, but not love their company. Kind of goes both ways, and I love their products, but I do not love their stock. I am not an investor, and I plan to probably never be an investor. And to boot, my favorite investor of all time, Warren Buffett, is the largest shareholder. Now, does this make any sense to anyone? This probably makes no sense to anyone. It kind of doesn't even make sense to me, really. But it goes against everything I would invest in, okay? Now, when I very first got into investing, quite a few years ago, but Warren Buffett was the guy. He was the guy I was searching up more than anybody else. He was the guy that spoke to me. He was the guy that resonated with me, this and that. Anyways, at the time, what was making the rounds was he had just bought Heinz. Pretty big news. So him and 3G Capital, this is a bit of a story, so stick with it. So him and 3G Capital decided to buy the majority 51% stake of Heinz. So that was back in 2013. Then they took the company private. So it was actually delisted, okay? So in this time, he made an agreement to also pay himself about 9% dividends, okay? This is tallying about $720 million per year. Crazy money. So that's how much money he was getting in dividends for this deal, okay? So he did this for a couple years really, and then in 2015, on July 10th, 2015, Heinz merged with Kraft and was relisted on the stock market on July 10th, 2015 as Kraft Heinz, okay? So the stock listed around $77 and has done, honestly, absolutely terrible in the past 3.5 years or so, okay? They've done really bad. And today was no different. They got absolutely smashed today. Absolute red day for Kraft Heinz. One of the worst days I've seen for a consumer staples ever. I don't remember consumer staples doing so bad in so long. These are supposed to be safe dividend value stocks. This stock is nothing like that. Okay, I know Warren Buffett's investing philosophy, and it amazes me that he did this. I know why he did this deal in a way, and it also confuses the heck out of me. He did it for his margin of safety, which I understand, and he got to take controlling right of the company. He controlled 6 of 11 board seats, so majority right there. And not to mention, he paid himself the 9% dividends, preferred dividends to himself, so that's a bonus. So that really drastically reduces his exposure and his risk of downfall, okay? So that's just a couple points. But they have absolutely enormous debt. I'll dive into their balance sheet later, but it's really bad, okay? And their cash isn't good either. They're declining sales. 3G is supposed to lean up companies, kind of make them meaner and leaner and produce more profits. So they cut about $1.5 billion when they bought them, this and that, blah, blah. I don't know what else they did. But it's kind of crazy that this is happening to this company. Now, again, Warren Buffett says he likes to buy companies with a moat, okay? And basically, if you don't know what a moat is, that's kind of your margin of safety. There's that area, or so you're the castle, your business is the castle, and there's a moat. The moat is everyone else trying to get in, they can't because you have that safety net, okay? So that's what he likes, a little safety net around him. But Kraft Heinz doesn't have this moat, okay? They are in a very competitive market. Yes, I absolutely love ketchup, and I will not buy another ketchup brand. I can't be, said about all their products like that, but they're definitely having some issues relating to probably the younger generations. And Warren Buffett is really old school, so the ways they're coming across this, advertising and stuff like that, they're not going to newer traditional senses, they're using older senses, right? Newspaper, radio, TV ads, all that stuff. They need to really hit that younger generation. That's just one area. But let's dive into some of the other more fun stuff about Kraft Heinz. If you'd like to know how much percent Warren Buffett owns of Kraft Heinz, it's 26.7%. 3G Capital owns 23.9%, and other investors are 49.4%. So obviously they own the majority share, totaling about 51%. There's a graph here that shows Kraft Heinz's net debt compared to their cash and other similar assets. This chart's a little old as it only goes up to Q2, but as you can see here, their cash to debt ratio is not very well. Their debt totals 30 billion, and I believe now it's about 31 billion, and their cash is about $1 billion, so not doing well. And let's talk about the news that Kraft Heinz released that's making the rounds today. So the main things that happened with Kraft Heinz today. So the company wrote down the value of its Kraft and Oscar Mayer brands by $15 billion, posted a $12.6 billion loss, and to boot cut its dividends by 36%. Oh, and on top of that, announced its accounting practices are under investigation by the Securities and Exchange Commission. Does it get any worse than that? You might as well just say you're going bankrupt at this point. Like, is there any worse news? There's not much worse news than that. That's like 4 really bad things at once. That's a lot. That's quite a bit. So what happened to the stock? Okay. So the stock went down $13.23 to close at a new 52-week low and then some at $34.95, bringing it down 27.46% in one trading day. Holy crap-a-moly. Man, talk about value investment. Safe brand, my ass. Jesus Christ. That sucks. I'm sorry for anyone that invested in that, because that is not a fun number to hear. Okay. I also want to hammer down another point that I love Warren Buffett. I don't know if I've said that enough. I've probably said it 10 times in this video, and I'll say it 10 more times. I absolutely adore that guy. I look up to him more than anyone. But I will never, ever, ever in a million years copy one of his investments just because he made that investment. I look into his investments, and I've still never invested in a company he's invested in other than Apple. And I invested in Apple before he invested in Apple, so You know what I mean? He makes more money and whatnot off of it than I do, but my percent's probably higher, so there's that. I guess. I don't know. It's not much. But I will not invest in a company just because someone else is doing this. And this cannot be more true. Okay, now as much as Warren Buffett is a genius, he still makes mistakes. And he didn't necessarily make a mistake. He had a greater margin of safety than any retail investor could have had because of his huge amount of resources, his money. Money is a resource, just like any other thing in life, and he used it to his advantage. He played a giant chess monopoly of sorts with Kraft Heinz. At the time, at the time Heinz, but what he did was he paid himself that dividends, and he reduced his risk and exposure on this company. So really, he kind of, at the time, made off like a bandit. I mean, this stuff happened, and that honestly sucks and was unforeseeable at that time, right? You don't know that the SEC investigations are going to come and all that other stuff. That's, impossible to see, right? You can't tell. Back then, you can see that their debt is still super high. At the time, their debt, I think, was about $28 billion, so still really high. and there wasn't really much interest at the moment. I think it was near zero. So he didn't pay much interest, and I guess, you know, he had a partner with 3G Capital, and he could control the company, and he controlled the company to more or less use it to his advantage. And you can't really blame the guy. That's what he did. That's what he kind of does. I mean, if we go way back when to one of his early investments, he bought a map company because he realized that the stock price was trading at $45 and the investment account was at $65. So he bought controlling stake in the company to liquidate the investment portfolio and sell his shares and make a $20+ profit for doing really nothing but buying shares. And I mean, he had to read that and figure that out himself, but that's what he does. I mean, he's really smart and he's a great investor, but that's kind of what he does. And this isn't, I don't think, much different. It's obviously a little different as he hasn't liquidated the whole company or anything like that, but he, you know, used it to his advantage. So don't think that because Warren Buffett bought it that you need to buy it. He makes mistakes too, okay? Obviously now this investment looks like he's definitely losing money. There's reports that he lost over $4 billion just today on this stock going down, because apparently he bought the shares that were bought were around 325 million shares, and they were bought at around $72, or they were bought at $72.50 per share. The stock price is hovering at $34.95. That's less than half. So he's down about 54% on his money. That's a huge loss, obviously, but that's not counting dividends or anything else, and we don't know about everything, right? So anyways, let's look at their balance sheet. Okay, so looking at Kraft Heinz balance sheet, the things are absolutely terrible. It's an absolutely horrendous balance sheet, okay? So let me walk you through a little bit here. So let's start looking at their actual balance sheet. So this is Yahoo Finance, and they're only updated up until September 29, 2018, so that's the most recent here. Obviously, we know they just reported earnings. They weren't good, but let's take a look at this one here. So it says their total current assets are $7.59 billion as the last quarter. Anyways, if you go through all their assets, they're at $119.7 billion in assets. That's great. But there's something that's missing here, and that is they have no short-term investments, no long-term investments, nothing like that. And most of their assets come from goodwill and intangible assets. Those are things I don't like to see, okay? Goodwill and intangible assets are things that are like the brand itself, patents, knowledge of the company, all this other crap, you know? It's kind of stuff that's hard to put a value on. It's not cold hard cash or anything like that, or investments or nothing like that, okay? It's just brands itself. Heinz, Kraft, Planters, Oscar Mayer, all those things, okay? So that's not good to see. I mean, really, they don't have much. I mean, their cash is only at $1.3 billion, which last quarter it says they had over $3 billion, so that sucks. But the worst is when you get to the liabilities. So liabilities is their debt. So the current liabilities is more short-term liabilities. It's $7.5 billion, which if you look at their assets, it's about the same. So that's kind of funny. It's about $9 million off. And then if you look over at long-term debt, it's near $31 billion. Okay, they're like 30 times their cash to debt ratio, their long-term debt ratio. And it doesn't really look like they're paying that down. If we look through the other quarters, they paid it down a little bit from the last quarter, barely, but they more or less added to it. Their other liabilities are over $15 billion, so total liabilities are $54.1 billion. All right, then after we see the shareholders' equity and we go through all this other stuff. So this is what I don't like to see. Net tangible assets minus $37.65 billion. That means after everything is said and done, this company is in debt, okay? Now this is surprising because Warren Buffett is supposed to be a value investor. So obviously this would be a shocking balance sheet. As a value investor, you would not want to invest in this stock. Obviously, his deal was sweeter than retail investors like you and me, but this is a terrible balance sheet straight up. I don't even know if we should look at the other stuff because it's so bad right there, but let's check cash flow. So it says total cash flow from operating activities. They're plus 670 million there. Wow, they're kind of all over the place here, eh? Plus 670, minus 184. Okay, that's weird. Total cash flows from investing activities, minus. They went minus. You have the Oracle of Omaha managing you, and you went minus. Wow, nothing is good here. Change in cash and other equivalents, minus 2 billion. Yeah, this is just horrendous at this point. So one thing I'll show you guys here is, if you look at their financials, so you see in 2014 they made 10.92 billion and earned 657 million. Then for revenue the next year they did 18.34 billion and earned 634 million. And then the revenue that the next year was 26.49 billion and they earned 3.63 billion in earnings. That's actually quite well. We look at it quarterly. In fourth quarter 2017, how they did 6.88 billion in revenue and earned 8 billion. That must have been from the tax reform or something. They had revenues of 6.3 billion and earned 993 million. Then they had revenues of 6.69 billion and earned 756 million. And then they had revenues of 6.3 billion and earned 630 million. Overall, with that balance sheet, it's horrendous. Straight up, that's an absolute terrible balance sheet. Just off of that, you would not want to invest in this stock, almost solely for that reason, because it's so damn bad. Like, it's horrendous. They have just over $1 billion in cash and 31 billion in debt, and the net, after everything is said and done, you add up the assets, the debt, and everything, they're minus 37 plus billion dollars. That's not something I like to see in a company right there. That's one of the key takeaway signs that it's a no bueno, no touchy, too nasty for me. I don't like. That is the key factor right there. One of the biggest things I look for. And honestly, let's look at Kraft Heinz as a company. Obviously, they're a monster company. They own tons of brands. Tons, right? I mean, we got ketchup. We got Planters peanuts. We got Philadelphia cream cheese. We got Oscar Mayer. We got tons of brands, Kool-Aid and Lunchables and a bunch of 90s nostalgia for the most part. And that's a big issue because I don't see kids eating Lunchables these days. Sure, I may not go to elementary school as much as I used to, but it's just something I tend to still see on the shelves of grocery stores. And I've been to grocery stores many times, and Kraft and Heinz have a lot of competition. And this is even more shocking when retailers like Walmart just reported earnings, and they were amazing, absolutely amazing. And Kraft Heinz isn't reaping the benefits of that. So the economy is doing great. Your number one place you're selling your products is doing great, but your company's failing. What else do you need to know about this company? It has the Warren Buffett seal of approval, but honestly, I don't think that seal counts on this stock. Do yourself a favor and always do your homework on any stock you pick. No matter who tells you it's a good investment. I don't care if Warren Buffett buys it. I don't care if Jimmy Buffett buys it. I don't care if Carl Icahn buys it. I don't care if Bradley Cooper on the Limitless drug buys it. I don't care. Don't care. I don't care. Do not care. The only thing I care about is that you research the stock and you pick it yourself. Never pick a stock solely because someone else tells you to and all this stuff. It's like, don't listen to your friends when investing because they'll tell you they bought Amazon when it was under $100, but they'll leave out the part where they also bought GE around the same time. And that leads to my next point, that this reminds me of GE, okay? Who was a huge investor in GE? You guessed it, Warren E. Buffett. Okay? That man was a huge investor of GE. He sold out. He was a huge investor in IBM. He sold out. Those were two companies that I was not fond of. Definitely, I never liked IBM. GE, more understandable. I'm not really against GE. I'm kind of neutral on GE. Actually, I've been looking to take a position in GE. So, but at the current levels, it was definitely high, and that analyst called it perfectly. Okay, so yeah, but don't follow someone else's advice. Moral of the story. But conclusion, Kraft Heinz is an expensive stock. I don't even care what the PE is now. It's probably some stupid PE of around 15 or something like that. But it doesn't matter. The stock is garbage. It's legit crap. Don't touch it. Its balance sheet is terrible. It's got tons of issues. They just slashed its dividends, which was the main thing going for it. I mean, it was a fairly high dividend, right? I think it was around a 5-6% at the time before it got cut. I think it was around like 5-ish%. Now it's probably, well, if it didn't get cut, it'd be about 6%. And now it's, was it about 3% or something like that? So I wouldn't touch the stock. Don't touch the stock. The stock is red hot because it's going down. Another thing, Warren Buffett releases his shareholder letter today, Saturday actually, so check that out. I doubt he'll mention Kraft Heinz much, but on Monday he has an interview on CNBC for 3 hours. 3 hours, yeah. I'm sure he's going to be asked tons of questions about Kraft Heinz. Don't expect him to say the stock is shit or anything like that. That's not his style. He will not do that. I guarantee it. He will probably stand by his investment, say he missed a couple things or couldn't foreshadow a couple events that happened and whatnot. He might calm down a few people, maybe want them to get back in. End of the day, do not get back in. The dust has to settle with this stock. It's hard to even put a value on this stock at the moment because it's so crap and it's so bad. It's just not a company I would even want to invest in. The growth isn't even there. It's not like they're going to double in profits next year. So it's not even worth the risk at all. It's not like anything like that, okay? It's not, it's just stay away from this stock. Again, I know I'm telling you my advice, but feel free to do your own research. If you believe the stock is a-okay for you, by all means, make the best decision for you and your family. If you feel Kraft Heinz is the best decision for you and your family, and more power to you. I wish you all the best. But you heard it here. I will not be touching this stock. But anyways, hopefully you enjoyed this video. If you did like this video, comment down below. Tell me your thoughts and theories on the stock. Let me know if you own the stock, if you know anyone who owns the stock, if you're planning on making a position in the stock. Let me know. Like this video if you do like it. That would be super cool and I would appreciate it. If you haven't already, hit that red button, not my sweater, but preferably the subscribe button. So just bang on that one real quick for me. Share this video, you know, do your due diligence on stocks. And until next time, guys, see you later and have an absolutely fantastic day.